This is Cecilia, one of the Coldwell Banker George Realty in Alhambra, Vice Chair of the 2023 Education Commercial Committee. Thank you for all attending today Lunch and Learn, the benefits of working with Chris Haun and Guild Mortgage. We are very honored to have Mr. Chris Haun as our today's special speaker. And furthermore, his generosity of the food provided. Thank you. During the presentation, if you have any questions, please type them in the chat box, and your questions will be answered in the Q&A section following the presentation. And this Lunch and Learn is being recorded, and it will be available on YouTube channel of West San Gabriel Valley Realtors. We have a Talia line of Education Committee. She is going to introduce the speaker and the topic and moderate the Q&A session. Let's pass the microphone to Talia. Talia, please take it away.
Thank you, Cecilia. Good morning, everyone. I would like to introduce Chris to us. Chris Haun is currently with Guild Mortgage, a company that has been around since 1960. His branch is located in West Covina, and he is a mortgage loan originator and certified mortgage advisor. He's a native of Southern California and have lived in the San Gabriel Valley for almost his life. Growing up in Montreal Park and graduating from McCable High School and then USC School of Business, and now presently residing in Acadia, where he has lived for the past 33 years. He has been in the real estate industry now for 33 years and have been an affiliate member of West San Gabriel Board for most of the time. He has always specialized in helping first-time buyers purchase their first homes, but have had experience with every type of residential buyer and loan situation out there. Let's welcome Mr. Chris Haun.
Thank you. Thank you very much, everybody. Thank you very much for attending, you guys. I really appreciate the turnout. There's been times I've done this and there was one person. So thank you very much for having a bunch of people and registering ahead. And for those of you online as well, I really appreciate it. So today I'm going to be talking about a little bit different than just programs. I'll be talking a little bit more about what our company Guild Mortgage does with our mortgage partners, you guys, in terms of helping your clients and how you can increase your business by working together with us. So I'll go over a lot of that. I'm also going to do a short presentation after that on seller buy downs. I know you guys have heard a lot about that over the last few months. In certain areas are working great, in other areas where it's still super competitive, might be tougher to get those done, but we'll cover that as well. And then I'll leave it open at the end for questions, whether it be on what we talk about today, or even if you just have questions in general about lending or Guild Mortgage, I'll be happy to answer them. So real quick, I haven't been with Guild Mortgage for that long. I joined Guild Mortgage at the end of last year in December, and have been with them for now just about 4 months, 3.5 months. And it's been like drinking from a fire hydrant in terms of how many things they have available to us and how many things I need to learn. So I'm still learning things as we move along in regard to their systems. But one of the reasons that I changed companies after being with my previous company, Gem Mortgage, for 18 years was their technology at Guild. I'm not real tech savvy, so anything that can be set up for me in advance and that I don't have to figure out to learn makes it a lot easier for me to get my information out to people. So that's one of the reasons, as well as being one of the largest lenders in the country, being around since 1960. Guild is one of the oldest. When I looked at the top 100 list, probably one of the top 3 or 4 oldest lenders in the country. So been around for a very long time. It's a large company. We service most of our loans. So I think 87% of the loans that we bring in, we service, which is really nice. So that gives us a lot of flexibility. And we have a portfolio of about $30 billion worth of business. So really large company, very good tools, programs like nobody else has, and just very excited about the move. So thank you again for attending. So our promise, we've got your back. You can trust us to wow your clients, close on time, and provide ongoing support for the life of your clients' homes and their future needs as well. We're not just here to close their transaction. We're going to be there to hold their hand in the future, to be part of their future lending situation or real estate portfolio. So we're here to help them today and into the future. So yeah, as I was mentioning, they've been in business for 60 years. That's a long time. Most companies haven't been around that long. My previous company was maybe about 30 years, and that was a long time. So 60 is double that. We have local origination and operation, so everything is local. So when we're talking about the appraisers that we use, they're local to our market. My branch is in West Covina. I live in Arcadia, so I'm between here and there all the time. We have the hub here if I have to meet clients as well. So just because I'm in West Covina doesn't mean I can't meet your clients out here if necessary. We're direct lender. So again, we service about 87% of the loans that we bring in. That's a big deal because we have more flexibility then on what we can get through the system. And we know that we're going to be the ones servicing them. So clients won't be leaving us after we close the loan. They'll be in our portfolio and we'll be working with them for years. So there's some loans that we don't service, which are some of the specialty products, maybe some of our jumbo product, but everything else pretty much we bring in, service, and clients can then use the portal that they used when they applied to make mortgage payments and other things like that. So really sophisticated software. So with our technology and with what we do as a lender with clients, one of the big things is you hear a lot about people getting pre-qualified, you hear about pre-approvals, and then one step further than that is an actual underwriter credit approval. So a pre-qualification is just when someone gathers information from a client based on a phone call. They provide that to us over the phone. They'll tell us maybe about their credit and what assets that they have, what their debt is. And if someone just looks at that, it's truly not worth much. You need to do a lot more than that to make sure your clients are going to be able to purchase and qualify. So we do pre-approvals on pretty much every transaction. So we'll get all the documentation needed, the W-2s, the pay stubs, the tax returns, the bank statements, explanations if needed. And we'll get that all into our system. We'll run automated underwriting approvals right up front. We'll pull in credit reports in the very beginning. We have ability to pull in soft pull and hard pull credit reports. Just we have more flexibility with a hard pull because we're able to run that with every system, where soft pull we're a little bit more limited. But what we try to do in every case is get a person fully approved. So even beyond that, I can issue a letter based on reviewing all their documents, running their credit, getting their information in our system and running it through automated underwriting. So I can issue an approval letter at that point. But I still like to take it one step further, and maybe they're out looking at that time, but I will then actually turn that file to the processing team to get it into our underwriters. So the underwriters are the people who approve loans in the mortgage industry. They're the ones who put their name on the approval and make sure that this file is going to go through. And by doing that, you're going to have some guarantees that we'll talk about a little bit later. Your file will go smoother. And underwriter, the actual person who's going to sign their name on that approval, has reviewed it. So you know that it's a solid approval. There's even people who then will waive things like their loan contingency if necessary when it's a competitive market, because they know an underwriter has reviewed their file. So we have home buyer protection packages that I'll talk about that go through some of that. We stay in connection with everyone during the transaction, our realtors especially, making sure that they're aware of what's going on at all milestones during the transaction. So when appraisal comes in, you know. When it goes to the underwriter, you know. When it's approved, you're going to know. And when we're drawing docs and other things throughout the whole process. And of course, we're accessible via coming into my office if you wanted to, via my cell phone is the best way to get me. I have an office number, but hardly anyone calls on that number. It's always my cell, and I prefer that. If you have clients have them call my cell. They can call me anytime, evening, weekends, whatever the case. I need to make sure clients get their questions answered whenever they have questions. So it just makes for smoother, happier clients when they know everything that's going on. And if they have a question, it can be answered at any time. And we don't only stay in touch with the clients through the transaction, but through our software and through our CRM programs. We do keep in touch with those clients throughout the process and afterwards. In terms of building business with our realtor partners, we do have co-branded information. So if you needed a specific flyer, an open house flyer put together, we have some really good software that pulls in information directly from the MLS if it's in there, and uploads it to flyers that I can prepare financing flyers for if you need. We also have systems built into our process that notifies us of trigger notifications. For example, if a past client or a current client pulls credit with somebody else, we're going to know about it. And usually that means they're in the process of doing something. Maybe they're trying to get a new loan, maybe they're thinking about selling, but we have those software that will notify us that people are in that situation. And we do have HomeBot as well. I'm not sure if any of you have heard of HomeBot, but HomeBot is a software that keeps track of your, well, it helps you to look for homes if you're in that process. So your clients can, I'll send them the HomeBot application. It has really good property information on it. I've had clients say, hey, I found this on your HomeBot application even faster than what the realtor was sending them. So sometimes there's really quick uploads of information to that application software. So definitely something that I have the clients use and you could use as well. Customer service, our loan tech, we have a very convenient online application process. There are those clients, of course, who don't like to do that. They want to complete an application with me over the phone or come into the office, and that's totally fine. But whenever they can use our software, it's very user-friendly. I basically put their name, phone number, and an email address into our system, and it'll send out an e-consent email to them, as well as an invitation to our application platform called My Mortgage. Once they go in there, very simple, they just answer the questions, complete an application. It'll ask them to upload certain items. I'll then get a notification once they've completed the app on my email saying, hey, so-and-so has completed their application. I'll go in and review it. And then I can generate a task to send them and say, hey, can you get me your W-2s, pay stubs, whatever they need, depending on their application and what I would need to fully evaluate that client. And again, we do all these things with tons of programs available so that we have programs to fit every kind of buyer. Some borrowers are fully equipped to do a regular full qualifying loan with tax returns, W-2s, or pay stubs, where others, maybe they are self-employed and they need a bank statement program or something else. So we have that as well. And again, everything we do is keeping this client in mind to be a client for life. We want to be there for them, not just on this transaction, but when they get ready and have kids need a bigger house, they want to move up, we want to be there to help them with that. When they need to pull equity, maybe to help a kid go to college, we want to be there to help them with that. And having this system then allows me to reach back out to the realtors who were the original realtor for those clients and say, hey, so-and-so is looking to move. You might want to call them about listing their home. So we try and make the whole process be customer for life mindset. So tools for a smooth transaction. One, if you send us a lead, I'm going to follow up on them pretty immediately. I'm going to reach out to them via phone call. Hopefully I get a hold of them. If not, I will send an email. Sometimes I'll send a text as well. And I'll just send some introductory information out to them. And if I've talked to them already and they're ready to apply, then I'll send an invitation to go to our application link and get their application in. It's an online application, again, for the simplest and smoothest process. So once they do that, I get notifications of every step in their process, and then I'm able to update them with things that are needed. And it just goes really smoothly. I talked briefly about the pre-approval difference, but again, we have many different ways to approve a buyer. One is pre-qualification, which I typically don't do. That's just asking questions and getting information, but not looking at documentation. That doesn't help anyone. Again, as I mentioned earlier, we really need to look at their pay stubs, their W-2s, find out and ask the questions that are appropriate, like if there's a job gap, how long was that? All the things that you want to have in place ahead of time so that you don't get into escrow and find out you have a problem when it's too late. So I will do a full pre-approval through automated underwriting, and then typically I'm going to turn that file into processing. It'll go to an underwriter, and within just 24 to 48 hours, at least right now, we're getting those approvals. And then I know all the conditions of that file, subject to them finding the property and getting an appraisal done, and things like that. And then I'm able to address credit issues or other issues that have come up in that application process. So again, it's smooth and we're not going to have trouble when they're in escrow. There are some clients who do the fast track, which is showing in number 4 there, where we can actually get things done really quick if they're comfortable enough to allow us to do the upfront automated verifications of employment, automated verifications of their assets. That seems to be the one that people are less comfortable with. They have to log into their bank, and that connects to our software. None of us have access to any of that information they're putting in. So, and your banks have approved it. All the big banks have approved it. Chase, BofA, Wells Fargo, whoever you bank with pretty much is in that system. And if they go in there, we're not going to be bugging them for bank statements throughout the transaction. It's going to come straight from that system. It's a little less invasive. We don't see all the same things that we see on a bank statement, but it's definitely helpful if they're able to go that route for sure. Email updates. We make sure that everyone is aware of what's going on throughout the process. So I'm going to be updating you with emails. Some are system generated automatically, so you're going to know what's happening. And again, every milestone, when appraisal comes in, values in, stuff from escrow and titler in, condo paperwork. That seems to be the things holding up most of my transactions these days, is getting the HOAs to get their condo paperwork out to us quick. It seems like half the condos that I deal with have 2 HOAs now, so we're having to get those from 2 different companies, which is a whole nother thing to talk about. But so we work on all that quickly. We do have e-closing, so all of our closing, the majority of documents can be electronically signed when your clients are getting ready to close on a transaction, whether it's a refi or a purchase. There are certain documents that still require live signature, like deeds and that sort of thing, so we do still arrange for notaries. But most of the signing can be electronic. We talked about HomeBot already. That's a service that helps to retain your clients and keeps us aware of what they're looking into. As their property value goes up, they're going to get notifications from HomeBot that, hey, your value went up 100,000 or whatever the case. And that then gets their mind going, shoot, we got a bunch of equity. Maybe we can take this and buy an investment property or buy another new home, sell this one, or whatever the case. So really good software to keep in front of clients. And again, doing all this to try and keep that client for life mentality. This is just a list of some of what we offer. So we're just like every other residential lender, except maybe we have some more stuff than others. But we do only residential. There may be ability to do commercial, but I just don't get involved with that. It's a whole different animal. I'm not going to experiment on your client's transactions by trying to do a commercial deal. So strictly residential, 1 to 4 units. But of course, we have conventional, and conventional, as you can see, with credit scores down to as low as 620, up to a 50% debt to income ratio on the right file. Not every file will be able to go to 50, but it certainly helps when you can. It makes for more buying power for your clients. Conventional loans, we need a minimum usually of 3% down, unless it's a first-time buyer program where they're funding that 3% or more. We'll talk about that later. Of course, we have mortgage insurance programs, so we have programs where you could buy out the mortgage insurance if a client didn't want it, or if there was a way or enough funds to be able to do that. FHA, we go down to as low as a 540 credit score. That's pretty low. My previous companies have only gone down to 580. Not that you'll easily find a seller willing to accept a client with a 540 score, but at least you have that opportunity and they can still obtain financing. Maybe they already own a home, but need to refinance and have a score that's that low. We do have programs for it. And then of course, VA as well. VA is a specialized loan in some ways. The guidelines are very different than other programs. It's one of the few programs where a buyer can go 0 down and not put any down payment at all, and they don't have any sort of mortgage insurance premium. They typically will have a VA funding fee on a VA loan. That's rolled into the loan amount in most cases. And it varies depending on how many times they've used that VA. And it could be 0 if they have a service-related disability like hearing loss or some other, any other disability. They can get sometimes the VA funding fee waived. Of course, we do jumbo programs as well, which is getting more and more to be the average size loan that we have to do for these areas, because everything seems like it's 700-800 or more. Jumbo still goes to, conforming goes to 722 and some change, and then the high balance goes up just over $1 million, $1,078,000 and some change. But anything above the conforming limit, usually the 726,200, you can usually do that as a jumbo if for some reason that pricing is better, and or maybe you have only 10% down and didn't want to pay mortgage insurance. So if it's above the conforming limit, typically we can use a jumbo loan to get someone into that. And then of course we have alternative products like your down payment assistance programs. I'm sure most of you probably heard about a program that was out just a couple weeks ago. It came out on March 27th, called the Dream for All Shared Appreciation Program from Cal HFA, California Housing Finance Agency. It was an incredible program, giving 20% in the form of a 0 interest second mortgage to cover the entire down payment, have a lower balance, avoid mortgage insurance. You did have to be a first-time buyer. You had to be under certain income limits. But in saying all that, they had $300 million worth of funding for that program. It was gone in 10 days, 10 business days, from one Monday to the following Friday, the money was reserved. But they're calling it a pause. So they're not saying the program's gone, but they're not telling us a whole lot more. So I'm not sure if that means they're going to roll out more money or some reservations are going to come back into the system. So I had probably 26 clients apply for that in less than 10 days. And many of them didn't get it. Most of them didn't. So I'm still telling them to have hope, and maybe we still go through the process, because if that money becomes available, you're going to have to be ready to go, like practically going into escrow to be able to take advantage of reserve and use it. We'll see if they make any changes to the reservation process as a result. I think this initial rollout was to get a better idea of how well the program would work and what would go on with reservations and other things. So that's just one of many first-time buyer programs. Cal HFA has a bunch of others that I do all the time. They cover minimum down payment. They'll lend your client to 3% or 3.5% down for FHA. And sometimes additional money for closing costs if they need that as well. Just the higher interest rate market has made some of those additional options a little less favorable right now. But Cal HFA has been a great partner of ours. I've worked with them for over 30 years, and they do great loans that help people get in with little to no money. If we could hold the question just till the end, and we'll cover it all then. Of course, we do renovation loans. So if you got a client who is buying a place and it needs work, we have programs for that. We have programs that help with energy efficient scenarios like solar or other things that could bring more energy efficiency into a client's new home. We have bridge loans as well. I didn't have that at my previous company. And we have things like builder extended rate locks when you need that longer rate lock because your property's not been completed yet by a builder, if you're dealing with that. We also do manufactured homes. So manufactured homes they're tougher to do. They have to be on their own land to be able to do them. You can't do them on a leasehold estate. It has to be fee simple. But we do have those programs, and I have used them to get clients in. So what do we offer in terms of guarantees and things that would help your clients when they go into escrow? And some of these things are tied to me actually getting that file fully into underwriting and getting it fully approved. And when it does, they're going to issue certain protections to your client that make it very safe for them to feel comfortable about going into escrow. One of them is credit approval protection. So if, for example, we go through that process, I pre-approved a buyer, I've sent it into underwriting, and an underwriter has actually signed that approval, they're going to get something called a CAP, or a credit approval protection certificate, which is basically the approval letter signed by the underwriter. And it has guarantees at the bottom of it where if for some reason on this approved loan it didn't go through and we said it would, we're going to be paying up to $1,000 to reimburse clients for their inspection or appraisal fees. If they lost earnest money deposit as a result of our decision and it didn't go in or go through, we can pay them back up to $5,000 of the earnest money deposit as well. Those are things that other lenders don't do. I didn't have any of that at my previous company. It's a big deal. Homebuyer Express guarantee is also there, where if it's been fully underwritten and we know all the conditions, we're going to issue a letter that allows a client to be guaranteed to a 17-day close. So again, that has to be done up front. I have to get the approval in ahead of the buyers going into escrow. Sometimes it's just, we just don't have enough time. People have got them into escrow really quick. So, and those don't work typically on your down payment assistance programs. It's more your normal conventional FHA or VA programs. There's different things involved with first-time buyer assistance programs that could delay it a little longer. So we're not as willing to put our guarantee on the 17 days if we're involving those other programs. But keep in mind, for a regular program, definitely do that. We have lock and shop also. I haven't used it yet because it hasn't been a situation where maybe in the beginning of the year it would have been something that would be a very good product for people. This is where you're just out shopping for homes. You're afraid of the market and rates changing, and you wanted to lock something in ahead of time. So you haven't even found a property yet. So again, if we have a fully approved loan, we can issue a lock and shop on that. It does involve a fee. So that's another reason some clients may or may not want to do it. It's a $1,500 fee we collect up front when we're locking it. We're going to lock them initially for 90 days. And once we do, they have to get into escrow usually within 45 days. And then from there, they're going to have an option if, for example, rates drop and they're already locked in at a higher rate, they have a one-time float down with that lock and shop. So it's great in a market where rates are high. You don't know where they're going, but you want to make sure your client's protected in case they go up further, and also have the benefit of the downside if rates come down for them to be able to take advantage of that. So don't have those going right now, but if a client wanted to, they certainly could. But again, we're locking for a 90-day period when we're doing that. So the pricing is not as good as if we're in a short-term lock, like 30 days when you're in escrow already. So I think they've built it in sensibly so the company can do it in a wise manner, yet have the clients protected. Oh, and payment protection. If a client's doing a regular product, a regular conventional, a regular VA, regular FHA, and they're doing it right now in this somewhat higher rate market, you know, a year and a half ago or 2 years ago, we saw rates that were half of what they are now. So that scared a lot of buyers away from the market, and a lot of people not wanting to maybe even sell because they're tied into a really good rate on their home that they refinanced a couple of years ago. But to help protect those clients, if, for example, rates were to drop, and we do a loan between now, so far it's been up to July 31st. So if we close now a loan between now and July 31st, and rates drop in the future all the way up till December 31st of 2025, we'll do a refinance for them and waive all our lender fees. So normally lender fees probably about $1,600 plus or somewhere around there. So with this payment protection program, we're going to waive all of those. They're still going to have some fees, escrow and title, and some of the things associated with it. But and if they're wanting to buy down the rate with points or something, that'll be there. But no lender fees. So at least it makes the client get a refinance for much more discounted cost. I won't bore you with these. These are on the back of the flyers, the whole terms and conditions of the things like home buyer protection. So if you need them, and I can email this out to everybody as well later. We also have a lot of technology that can help you as agents as well. We have something called Mobility RE, where we can give you an actual, your own application that you can then give to your clients to search for homes. So they're not just searching on Zillow or Redfin or Realtor.com or whatever it is. It would be your app with your branding, your name on it. And every time they're looking at a property, you're getting a notification that they've looked at something. So you can actually reach out to your client and say, hey, I saw that you were looking at this home. Would you like to make an offer? Or whatever the case. You're at least going to be more familiar with what they're doing out there if you were to use that application. Yeah, once the buyer downloads your branded app, they have a one-stop resource for home search. So it integrates with NMLS. MLS, sorry, I'm using my mortgage terms, MLS. They get real-time notifications to your clients when new properties come out. Very, very helpful stuff. You can do sign writers that also will link to your system if you wanted to use that. So if that's something you're interested in, let me know and I can get applications out to you guys so you can use that on your phones and use them with your clients at your open houses. Another great tool for that. My Mortgage, that's our portal that clients will go into when I send them an invitation to join an application. So basically it's just an email invitation. They go ahead and click on it. They're able to log in, create a password, and then they're in our system. And that system will stay with them. So whether it's closing a loan right now or in the future, they have a closed loan and they want to go through that system to make payments or get documents and things, it's an all-in-one system. So very, very neat technology. Because of having some of these different things like fast track, which I talked about earlier, if that client is okay with putting in their banking information into the portal, we're going to get all of that information without them having to provide it to me every time I ask for an updated statement. We're just going to be able to reach in and get it. And it's only for a limited time while we're doing the transaction. But it sure makes for a speedy close. If you have that along with an updated original verification of employment through the system, it can then sometimes be run through automated underwriting with guarantees that you're going to have a much quicker close as a result of doing those things. Again, not every client buys into being comfortable with putting in their asset information, but it's super safe. It would, if it weren't, none of their banks would approve it. So it's something that our software works directly with their banks to do. So customer retention. You don't want to just close a transaction, or we don't want to just close a transaction for your clients and then just say goodbye. We want to keep in touch with them throughout their lives and know when the next opportunity is going to come up for them to either buy, refi, do something new. And so we use HomeBot a lot. HomeBot, again, is an application, and we actually have a version that we can share with you guys as well. There's a free version that I think you can use up to 25 clients on a monthly basis and get information out to them. Once it goes above that, there's different levels that you could sign in and use if you wanted to pay for it, but there is a free version as well. So really good software. I get notifications every few days that so-and-so was looking at value in their area. You might want to reach out and find out what they're thinking about. So it just keeps you in front of the client, keeps information about what they're doing on our radar so that we can reach out to them. We are a company that partners up and wants to give back. So they're very big at matching us to a certain extent if we wanted to personally give to a certain foundation. And they do things with scholarships to certain foundations as well. That's just part of what Guild does. So these are questions that maybe you or your client would want to ask their lender to know how solid things are and what they're doing in the process. So this is, again, it's just questions that you might want to ask, like, does your lender specialize in home loans, first of all, or are they someone who does home loans, notaries, escrow, title, everything under the sun? I don't think they're typically going to be your best resource. But so you want to make sure that what they do is just specialize in loans. How long they've been financing homes. That says a lot about a company. Companies come and go in the mortgage industry. In 2008, when I was doing loans, I remember there was something called an implodometer that was on the internet. And we would just look at that each day and see how many companies were going under and disappearing and no longer in the mortgage world. So the fact that Guild has been around for 60 years is a testament to how well they do and what they've done for clients in the past. You want to know that your lender has a secure customer account portal so that when they give you documents, they're not subject to getting lost on the internet or someone snatching that information and doing identity theft. This is all through a secure portal that we have. You want to ask your lenders if they have a local branch location. It's always nicer when you've got local processing, like local underwriting, local funding, or at least parts of those processes to be local, especially appraisers. You don't want some appraiser who's not familiar with your area appraising your property. You might ask your lenders, how much of their loans do they service? For example, my previous company, who I was very happy with for a long time, They started servicing loans towards the end. Prior to that, they would sell all their loans. But I knew that whenever it was an in-house loan, I could easily check the system for questions if they called me. Everything was still within our company. And Guild is big on that. Again, I mentioned earlier, 87% of the loans that we originate, we service. So your clients will be with us and get their payments from us. I mean, their payment coupons from us, and everything about their loan is still connected to us. Do they have co-marketing opportunities, the other lenders? So you want to make sure if you're working with someone that they have marketing material and process that can help you to help your clients. So if you need a buy down flyer, if you need an open house flyer, if you need just to help your clients understand the process, we have all kinds of packages that we can provide to you that you can give to your clients for those purposes. So why Guild? Why would you choose us or myself? One is we have deep expertise. So it's one of the largest independent mortgage bankers in the country, and have been doing this for over 60 years. We know what clients need. We know what their desires are. We know how to service them and keep them in our system and keep them happy. We make sure that the loan is going to fit their life. There's so many loan scenarios, and I often tell clients, you can't judge what your friend did to buy their house or your family member on their loan experience, maybe some of the process, but it's really individual, and each client situation is different. You could have 3 people working for the same company, having similar credit, but different ways they get paid, different things that would make their file different. So we need to evaluate that. You need expert loan agents to do that, and we are that expert. Again, we're a direct lender, so it's very different when we're funding our own product. It's not we're going to a wholesale lender and having to find out if their underwriters will accept the product. We become very familiar with the underwriters on our team, know what they're looking for and expect, and it just makes it a very smooth transaction, as well as the fact that we then service their loans afterwards also. And then, of course, local speed and support. 30-day escrow is a short time when you really think about it. There's about 4 weekends in there, so you lose 8 to, if there's a holiday, more than that in days. So really, as a lender, we're working with maybe 20 days, somewhere around there of the process. So a lot has to happen. So we've got to be smooth about it, and things can snag us up or hold us up, like condo paperwork or things like that. But typically, we're going to do everything we can to make sure that it's a smooth, fast, and clean close for those clients so that they're happy. So that's it for that part of the presentation. I'm going to go on to cover some other things on buy downs. I've got, is that clock right?
Yes.
I got 15 minutes or so, so I'll try and go quicker this next one, but let me just switch gears real quick. If you guys want to grab more food, go right ahead. If you have any questions on that first part, you can feel free to ask me now or hold it till the end, whatever's better for you. Okay, so I'm going to move on to seller buy down options and explain a little bit more about how seller funded buy downs work and can help your clients. So I'll try and move through this quicker. So what we're going to cover is how to use seller credits to buy down the interest rate on a home. So why use a seller credit to buy down the interest rate? Well, as you are all familiar, we're in a market that's not high historically rate-wise, but is considerably higher than where it was just a year to 2 years ago. We had seen rates in the 3s and below due to the pandemic. And shortly thereafter, when inflation started to kick in, the feds had to move rates higher to try and slow that down. And they've been doing that consistently for the last 18 months. And they're still doing it. There's still probably going to be 1 to 2 more rate hikes. So clients are having trouble absorbing or wrapping their heads around this higher interest rate. So buy downs will help that. Home has to be on the market longer than the seller would like typically to use a buy down or use this strategy, because if it goes into escrow in the first week, no one's having to put out a concession to help buyers to get that home. They're selling it quick. So this is going to be more on the homes that you see sitting on the market for a while. We're in a marketplace where they're sitting for a while and you want to move that house. So if you're a listing agent, you're trying to find out ways to get a stale listing moving, think about a buy down, a seller paid buy down. If area home prices are high, a buy down also helps because it lowers the initial payments for those borrowers dramatically. If rates are high or rising, that's another market you definitely want to use it. And the home has some flaws. Maybe it's not moving so quick because the sellers didn't do all their fixing up ahead of time to move that quick, to incentivize a buyer to, hey, buy this one, maybe the buy down is helpful. So what is a buy down? It's a lump sum deposit that turns buy downs, the borrower's interest rate. What the heck? It's a lump sum deposit that in turn buys down the borrower's interest rate for a period of time. So there's both temporary and life of the loan buy downs. A temporary buy down would be for the first 1, 2, or 3 years, the interest rate is lower than the actual note rate that it'll eventually be at. If it's a permanent buy down, that's where you use points to buy down the interest rate permanently, have that fixed for 30 years. And really the only way we can do that is through seller credits or if a lender's offering some kind of buy down incentive. Buyers can't do it themselves because they would just be subsidizing their own payments. So that doesn't make sense for them to pull their own money to just pay more towards the mortgage. So it only makes sense if the seller's doing that. So what types of buy downs? On the temporary side, there's a 1-0, a 2-1, and a 3-2-1 buy down. And we'll get a slide that goes over that. And then of course the permanent buy down. So 1-0 buy down helps the buyer's interest rate be reduced by 1% for the first year. So year 1, buyer pays 1% less than the actual fixed rate it's going to be at for the remaining 29 years. So year 2 and on, it's at the note rate. 2-1 buy down, so it's paid down 2%. The subsidy allows them to have an interest rate that's 2% below the note rate in year 1, 1% below the note rate in year 2, and then by year 3, it's at that fixed rate for the remaining time. And a 3-2-1 buy down just adds an extra year. So for 3 years, they're going to have savings on their mortgage. So if they have a note rate of 7, it's going to start 3% lower for year 1. So you're going to be at 4, year 2 at 5, year 3 at 6, and then year 4 and onward at the note rate. So sellers have to offer this to the buyers, or your agent, or you as agents writing an offer would write it into your offer that you want the seller to pay for a buy down. And usually for a 2-1 buy down, it's costing somewhere around 2.3% of the loan amount. A 3-2-1 buy down is probably close to 3+%. But if you were thinking of doing a 5% price reduction to move that home, this may be a better option. And I'll show you a slide, and you'll have one in these documents up here that shows you how much a difference it really makes to the buyer if you do a buy down instead. Permanent buy down, again, is just commonly, you hear the term of buying points or paying points to lower a person's rate. The more points you pay, which is basically prepaid interest, the lower the actual interest rate can be for your borrowers. So sometimes a permanent buy down is the way to go. In a market where we think rates are going to drop in the future, the temporary buy down is probably enough. We're thinking in about 18 months that we're going to see considerably lower rates. Maybe it's a little less than that, maybe it's a little longer than that, but a 3-2-1 or a 2-1 buy down will help that buyer to really make it more attractive during this time of higher rates to get into the property rather than wait it out and not move on buying. Permanent buy down, it's basically we take the cost, apply it to whatever's necessary to lower that client's interest rate permanently. So not a temporary one, that'll be for the lifetime of the loan, all 30 years. This example up here kind of shows a couple scenarios. So the very first column on your left shows a $750 purchase price, no seller credit, and you look down, what is the payment on that? $4,256 at a rate of 5.99. And these are just rates that have been pulled out to show this scenario. It's not current rates. Then you have $730,000 price because you reduced your price by $20,000. And what does that do for a buyer? Well, it saves them about $95 on the payment. Not a huge incentive to make them move forward. Then you look at, well, what if you applied that same $20,000 that you were going to reduce the price by to actually subsidizing a buy down? And this is just showing you permanent buy down. So showing if you use that, you could maybe buy down the borrower's rate to 4.75, and then you're saving over $400 a month. And then on the one to the far right, maybe only use $10,000 credit to buy down the rate, and that still saved them $326. So you see it's much better than just doing a price reduction in terms of what it's going to attract a buyer to and make it more a better scenario for them. And it's a win-win situation because the seller's able to maintain the value of the property. They're able to sell it at the higher price rather than doing the price reduction that really nets the buyer very little in terms of savings. The buyer gets a significant discount on their monthly payment, and you as a listing agent have sold the property at asking price in some cases. So just keep in mind, it's a great tool. You have to be careful though when using a buy down because of appraisal gap potential. So if you're adding that cost of this buy down onto the purchase price and then hoping that all works well and the appraisal comes in, make sure you really know value in that area and that the value can be what you're raising it up to subsidize that buy down. Because if not, then the buy down may not be there, or we have to have another strategy to do maybe a less down payment loan for that client still. Which there are strategies to do it. Like if you start with 20% and that doesn't work, doesn't mean that we can't do a 10% down loan for the client if the appraisal were to come short. They might have mortgage insurance, but they'll still get into the property. But again, most of the time we can avoid these appraisal gaps if we have a plan up front to deal with it. So how can we help? We're an experienced team that does these a lot. We'll employ the appraisal gap strategy to make sure that there's some other way to go if it doesn't come in, if you were to go up in price. Buyer and seller education is very important and key to make these work, because if you just hear buy down, it's super abstract thought process, and you may go, what the heck is that? And how does it help my clients? So hopefully some of this will help you in some of the flyers that I have up here. And again, we know how to employ those buy down strategies so they help people and work for people. So that's really it on the buy down, but I'm going to pull up a couple other things that are related to the buy downs. Okay, so we do have a program where if you have a seller who's not willing to pay for a buy down, and you think it would benefit your clients to have a lower rate, we do pay for a 1-year buy down. So we can lower their rate at least for 12 months if they were afraid of the paying the note rate. So let's say note rate was 6.5 at the time. We can get them down to 5.5 through a lender funded buy down. So it's something that we pay for. We're covering it. So there's no fee to the client to do it. So it is one that I'd probably rather do less of them than more of them, just because we do get paid differently on them. We take a hit and get a different commission because the company's losing some money to pay for the incentive to do it. But I'll do it all day long. It's going to help a client get in and make it more attractive for them. So that's one program that we have that just reduces it for 1 year, and they call it Payment Advantage. But we also have Payment Advantage Plus. Yeah. And the Payment Advantage Plus, it's a little bit different in that it's a 2-1 buy down. And we have the seller pay for the first year of the buy down. So the difference between the bought down rate and the note rate times 12 is what the cost would be. We pay for the second year to continue to buy their rate down for 1 more year. And then by the third year, they're at the note rate and from the lifetime on then. And I'm going to show you one more example, and then I think I'm out of time and we'll go to questions. So this one, I hope you guys can see it. If not, there's a printout here for you folks online. If I can get your email addresses, or I'll get them from the board, I can email all of these out to you as well. So this is a really good example showing a few different things. So are you guys able to see that from where you're sitting? If not, again, yeah, get a copy up here. It shows an $800,000 sale price with 20% down. So in the very far column to the left where it says conventional 20% down payment purchase, you see the price of $800,000. You see 20% down. You see the loan amount of $640. I used interest rates of 6 3/4 for this. And then you see how much savings is that for the borrower? None, because they're paying full price, basically the full $800. Now, let's say you as an agent had that listing at $800 and you were thinking of doing a price reduction. So you do, let's say, a 5% price reduction, which is $40,000, and lower the price to $760, and a 20% buyer comes in, if you look down to that green monthly savings amount, how much is that buyer saving by you doing the 5% price reduction? It's only $256 a month. I don't know if that's a big enough incentive to get a buyer off the fence and go, hey, I really like that on this higher priced property. I'm going to do it. So then you look at the next one, which involves a 2-1 buy down. So you see the price stays at the 800, the loan amount still 640, but instead of paying at 6 3/4 for that first year, they're paying at 4 3/4. You look down the line to see what that savings is for the buyer. Now you got a huge savings, $812 a month. That's putting them more in line with where rates were before the whole rates went up. So they're like, wow, I can do that payment. And then the following year would go up a few $100s for the second year. And then by the third year, it would go to the note rate and continue forward. But they saved during that period of time, during which we're hoping the interest rates do get under control by the Fed's a little late, dollar late, day short scenario. They should have started raising rates way before they did, when they were saying it was transitory and we knew that it wasn't. But anyway, they have to get through this process, continue to do that until the economy slows enough and jobs slow enough. So there's not all this inflation and rates can come back down. Again, not that 6s and 7s are historically high rates. That's been probably the average if you went back to 1970. But the last 20 years have certainly been lower. And the last 3 have been tremendously lower. So people are still stuck on that. You want to let your clients know, don't wait and hold out to get back to those 3% or below rates. That was solely generated by this pandemic that we had and the government doing additional things that kept the rates down and kept cost of money close to zero. I don't think we're going to see that again without another pandemic, and nobody wants that. So hopefully we never see that again. So again, this is just a strategy and a tool you can use that'll help you to get your listing sold quicker if it's stale. Again, if you're in a market like right near here, nothing's sitting more than a week or two. It's in escrow already. So it's going to be those stale properties, the ones that for whatever reason aren't selling. Maybe they need more work. Maybe they're whatever the case, they're just not moving quick. And you need to incentivize a buyer to look more at that property, and maybe advertising it with a buy down that's going to save them some money can do that. So if you ever need flyers put together to explain a buy down and show them, well, our seller's willing to subsidize a buy down for you, this is what it'll look like. You might all of a sudden have that home going into escrow without having to reduce the price. So it's definitely something to look at before doing the price reduction. Because if they were to see the flyer like this here and realize, wow, a price reduction of 5%, not going to do much for the buyer, but you do a 2-1 buy down, you're saving them $800 in this case. So it's a huge amount. Even a 1-year buy down is probably going to save them over $400. Still much more attractive. And then again, hopefully during that time, rates come back down and you're able to then, they're able to refinance and get into a permanent situation where it's lower. But that's actually all I have. And I knew I'd go through an hour pretty quickly. But do you guys have any questions, whether it be on any of this or anything lender related? Yes.
I have 3 questions. You know,
Of course.
there are ladies that no time, right? Is that program still available?
Yeah, that was the one I was mentioning in the beginning, that Dream for All shared appreciation program. That particular one, which was giving 20% of the sale price, is temporarily on pause. So they're not saying it's over. Their wording specifically says we're pausing this program because it's been fully reserved. But there are talks, or at least rumors, that there's additional money that may roll out. I can't say that there is or not. So you can't really base your clients offering procedures on hoping that that's going to be there, because it may not. But there are other programs that are always available. CalHFA has numerous other ones that won't cover 20%, but they'll cover the minimum down so that the person can still, if they can qualify with 3% down and need that 3% for the program, or 3.5%. We have programs like that. And there's numerous programs to do that.
Okay. I also have a client that they are retired. So, you know, it is a good time to refinance a free and clear investment property. And also that investment property have a small loan on it. what is the rate? And then, is it worth to do it now?
Well, that's really going to probably depend on the individual situation for that seller, because rates are higher right now. And anytime you do anything that's beyond an owner occupied loan transaction, you're going to have additional costs to it. So an investment property, first off, you need more equity, or if it's a purchase, you need more down. And then there's pricing adjustments. So they're getting a higher rate than someone who's going to buy a home to owner occupy it. So if that client can afford on their retirement the payment that's associated with how much they need to borrow, then maybe it's a good time. Rates are higher right now. So, you know, if you had a choice and could just wave a wand and wait till they get lower and you could do it at that time, that may be better for them if they're on a fixed income like a retired person might be, because their qualifying is not going to be as probably as high, because usually retirement income tends to be less than what you were making when you were working. So it's just going to depend on the individual situation. Will the rental property still debt service after you put a loan on it? You're still going to have positive income from it. So all those are things that we really have to sit down and do a thorough evaluation with that client to make sure it's the best move for them. Some it might be, and others it might not be.
So do you know the interest rate for those refi?
For a non-owner occupied, would it be just pulling cash, right?
Right.
You're probably going to be in the mid to upper sevens, I would think, right now. So definitely higher than stuff that's owner occupied that might be in the mid to upper sixes presently.
Okay.
Definitely
I
welcome.
think there is one question, and so they
Okay.
ask for, do you make any bridge loan and also non-QM
Yes.
loans?
So the answer is yes to both of those. We do have bridge loans. And it's the first company that I've worked at that has its own bridge loan product internally. I definitely need to do more to study the guidelines for that, but we have it. So I'll just learn them and it'll be very easy to do. But we definitely have bridge loans, and we do have non-QM as well. Non-QM is typically not done internally. Those are loan programs that we have arrangements with other lenders to offer. So, but we have them, bank statement programs where you have to rely on other than tax returns. Sometimes you're self-employed. I seldom see tax returns on self-employed folks showing a whole bunch of money that they're making. The gross income is always a crazy huge number. Once you get down to the bottom of that tax return and find the net income, it's dramatically reduced because no one likes to pay a lot of tax. So they're using every write-off that they can to lower that. Sometimes that affects your ability to qualify on paper. So then we look at the non-QM programs like bank statement programs or other asset available programs that are out there. So yes, those are available as well. Mm-hmm.
Yeah, you know, back to that CAL
Yeah.
HFA.
Yeah.
I noticed that not all the lenders participate in that program, right? Some
Yes.
like even the big bank, Wells Fargo and some B of A, they don't do that.
You're absolutely right. And often some of those big companies are approved to do them, but they choose not to do them. I've noticed that with any sort of down payment assistance program or first-time buyer program, they tend to be less profitable loans to a company. And they're much harder to do, a lot more work. Very easy to take a 20% down client who's got all their money, stable salary jobs, and qualify them very easily. When it comes to down payment assistance programs, you got to flip that loan so many different ways before you come up with the right scenario to get them qualified to a high enough price because they're a first-time buyer and not making as much money. But there are definitely ways to help every client out there to be able to qualify for something. But sometimes I will find that that program or other down payment assistance programs, I can qualify a buyer, but then when we see the amount they qualify for, it's like, well, it would work great in another state, but may not work here in at least San Gabriel Valley for sure. You'd be surprised at how other areas of California have lower prices though too. So you were like needing a buyer to get into a $400,000 home. They're out there. They're just not close driving distance. So, but there are programs that can definitely do all that. That Dream for All was such a good one because it funded such a large amount, 20%. So if you had an $800,000 purchase price and you could qualify for the loan resulting, you were getting 160,000 down and only financing 640. Much better than financing 95% of 800, you know, and having to finance like 760 or whatever. So your payments are a lot lower. So that made that program such a huge deal. And in my 33 years of lending, I had not seen another program that was as liberal and aggressive as that one. Because usually first-time buyer programs, you're going to have income limits and restrictions. Their income limits were high. LA County, you could make up to 180,000 and still qualify. Orange County, 235,000. So you didn't have to be low income to be able to do it. They had some benefits to people who made less than 80% of area median income. They would on the shared appreciation part, they paid back less. They only paid back 15% instead of paying back 20%. But again, at that category of income, not too many people can qualify around here. It would qualify for further out, so maybe towards the desert or those kind of areas. But yeah, there's that, and hopefully it comes back. I really hope so, because it was so phenomenal. I just wish they had like a couple $2 billion worth of that to help people get in. Did I answer your question?
Yes. Hi, Chris.
Hey, Tomas.
I have a question in regards to refinancing.
Yeah.
When the client puts the kids as a cosign, does the lender request, does the lender requires the chain of title, having the son being in the title?
Well,
Because that will trigger a reassessment. So that's
yeah,
my
you
question.
have to be super careful anytime you're doing any sort of title additions or removal of people from title, because you don't want to trigger those sort of things. There probably are some provision or tax code that allow for you to do it with a child if you fill out the proper paperwork to do so, but I don't see clients doing that too often. Usually they've already come to me and they've been added on there. Yeah, so it depends on the type of loan. So for example, if you're just doing a rate reduction refinance where you're not trying to pull out cash, you just want to lower the rate, typically you can add the child on and almost immediately be able to do that. But when it comes to cash out, it's a little different story. So if you're trying to pull equity, this is where it's different. They'll want that child or whoever the co-borrower is to be on title already, and they have to be there for 6 months before you can pull the cash. So that's the big difference. If everyone's living in the property and rate term, no problem, but cash out, whole different story.
Okay, thank you for all the questions.
Yeah, I'll be around after so you guys can ask me individual questions for
On
sure.
behalf of Western Gabriel Valley Realtors, many thanks for Chris.
Thank you guys.
Beneficial information. So remember to work with Chris and then you will get the benefits. Okay.
I can't speak for other lenders, just I know what we have. So yeah, definitely. If you send your clients.
There are
to me, I'll
many
take care.
classes and seminars coming up. Please do register and attend. Tomorrow, the 19th, sexual harassment by Paul Chen, attorney and also the mayor of the city of Arcadia. And on the 24th to 28th, CCIM 101. And on the 26th, virtual training, Stevie card. Okay, thanks again for your attending. Hope to see you tomorrow. Bye.
Thank you all very much. And I'm sure there's more.